Jal, hi, morning. Remarkable feat, especially given the kind of market environment right now, to manage to get check after check, and now an 11th one as of last evening coming in for Reliance Jio, and them managing to completely get debt rid from their balance sheet.
Well, yes, indeed. This is significantly commendable. I think it's also that it has been not done in desperation when the stock price had fallen to 850 rupees recently, but it is being done from a position of strength and after demonstrating their significant capabilities across businesses, not only in Jio, but also on the retail side with the tie-up with Facebook, which gave a significant shot in the arm, and in fact, even on their refining and petrochemical side, which during the lockdown has demonstrated that they have managed to run their facilities at very optimal levels. And in fact, as the fourth quarter results also demonstrate, their GRMs have been very healthy. What is commendable is that they have done it from a position of strength. As a result of this, the balance sheet has been strengthened even further. The question a lot of including domestic and international investors, not just the question, but what the feedback we get from international and domestic investors is that there are very few companies today which are not only relatively safe investments from the perspective of now strong balance sheets, but also have got meaningful growth opportunities. So I think the way the whole company has been maneuvered, not just again from a capital raising perspective, but over the last several years, this is really things coming to a fruition of efforts of several years again, not just the management of these teams, including Jio, refining, retail, but across the board, I think.
And a little premature right now, Jal, and I don't know how closely you've been tracking the retail end of the story, but there's heightened buzz that maybe they're looking at a stake buy or a whole buy when it comes to the Future Group as well and the retail arm. In that sense, it's not just about Jio, but as a group, strategically, they're trying to strengthen just about each and every vertical of the company.
So on the Future Group, I've also read in the media as much as you have. The strength of Reliance in the retail business is not just client reach, but essentially their entire vertical and horizontal integration, right from logistics to warehousing to the entire chain. And India, as you know, is a very fragmented market, and to that effect, it is very essential that that part of your chain is very strong, not just your end consumer reach. One would have often heard that the markups in pricing primarily for food items is tenfold by the time it reaches consumers. Now, Reliance, as you know, every quarter sets up the number of retail chains, the outlets it sets up is more than actually most other companies in the industry, the total of most other companies put together. And while they have been building out the back end of the chain as well, but given the length and breadth of the country, because you've really targeted so far the organized market, which is a little more than 100 billion, but there's a $1 trillion unorganized market sitting there. So I think looking at Future Group would be a part of the strategy to augment and enhance their existing capabilities. I think what they would be scrutinizing very closely is clearly two things: how significant are the synergies, and at what valuations that they can potentially acquire this. I'm not saying that they are acquiring it or not, and I just, as I mentioned, at the cost of reputation, that I've read from the newspapers as much as you have. So I don't know if they're acquiring it or not, but it'll be interesting to watch.
Yeah, it's a caveat here that we don't have any confirmation. These are just news reports based on what agencies have been reporting, that a deal as such is in the works. But where does it leave the shareholders then, Jal? I mean, the stock is already at 1670 rupees per share. Is there still an opportunity to buy, or do you really have to wait for that dip to come in, and God knows when it would?
Well, we do have a buy on the stock. I mean, I'm not a good trader, but we do have a fundamental buy on the stock.
Jal, how much of importance should we pay to the fact that Reliance has now become a net cash company, not at gross level, at net level, at a time when interest rates are low, raising capital is easy? Do you think markets are unlikely to get too much excited about Reliance becoming a net debt-free company?
So, I think I've said this in the past as well. Frankly, and this goes back to basic economic fundamentals. I personally don't believe a debt-free company's cost of capital is optimal either, because there is a tax break to debt, and economic theory suggests that there's a certain optimal amount of debt all companies should have. So my thought is that being completely debt free is also not good. Now, having said that, although Reliance's stated net debt is about 1,61,000 crores, and while we estimate that it's more in the region of about 2,50,000 crores. So our thought is that there will still be some debt left over, and in fact, my thought is that a bit of debt is a good thing. Also, there is, in my opinion, also Reliance has built this cash as a war chest for further growth. And growth, whether in the form of potential acquisitions or organic growth, will still require some capital. I mean, for the moment, Reliance's capex has fallen from 1 lakh crores to 76,000 crores into last year, and we estimate it may fall further by the end of this year to 46,000 crores. But you could see, I think, in the form of acquisitions, especially this number picking up. So we'll wait and watch.
All right, Jal, appreciate your time. Stay safe, my friend. Always, lovely to interact with you. Jal Irani, I must share this with our viewers. 20 years ago when I met him, he was tracking Reliance. He's still tracking Reliance. You can understand that how much of debt he